We can go ahead and get started. To kind of set the scene, we have one of our recurring guests on here, our sales guru, Ned Phillips. Usually he's giving webinars on the topic of selling to customers. However, I say this to pretty much all of my founders that the number one trait in a founder is sales. You're always selling. You're selling your solution to potential customers. You're selling yourself really to your team. You know, they need to back you and believe in your vision. So you're selling yourself and your vision, but you're also selling, you know, that vision to investors. So that's what we're going to be focusing on this session, is really how to sell to investors. Ned can give a deeper dive into his background before we get started on the session. One thing I will say is we like for this to be collaborative. That's why we did a room, but we do ask that everyone keep your mic muted if you're not speaking. We don't want to hear any more roosters going in the background, so let's keep it quiet. If you have questions, like as we're kind of riffing through this, feel free to drop them in the chat and we'll pick them up as we go. And if if we do, or whenever we do answer to one of your questions, if you have follow-ups, feel free to unmute yourself and chime in. Ned really likes a collaborative environment, so feel free to jump in as well. Ned, build on that if you want. But yeah, I'll let Ned take it away, give him an introduction to him. Actually, no, sorry, one more introduction from me. My name is Bill. I'm the head of startup advisory here in the UK for Hyper Startup Studio. I work with the founders on all the commercial elements of getting them to launch. So once founders come into our program, we work in two parallel work streams, one being the commercial side and one being the product side. And here in the UK, I'm leading on the commercial side. So that is myself, and Ned here will give an introduction.
Study. However, AI solvers bypass
Bill, thank you so much. I appreciate it. Good to see you all. I have an admission. I think that rooster might be with me. I just heard it. So that was me telling you it wasn't. I know. I think it is. Not much I can do about it. Yeah, Sean. It was me. Hands up, right? So
Rooster's got jet lag or something. Maybe he's just flown over to Bali as well. He's on a weird timetable.
I was actually thinking, what are they meant to do at 5 o'clock? Do they sleep at 5 p.m. and then, because it's 5 p.m. my time, people. I am, as mentioned, in Bali. I go between Bali, Singapore. Anyway, enough rooster stuff. Bill, thank you, man. I always appreciate you hosting this. And look, you know a shit ton about raising money too. So, I'm not going to hold the whole hour. I'll give my views, my thoughts, and then we can, bounce ideas backwards and forwards. And as Bill says, look, throw your stuff in the chat. I'll answer it. I'm not great at I am going to show you one deck. I'm going to show you my best ever deck, the one that raised 10 million. So I am going to show you that deck because I did hundreds of decks and they were mostly crap, but I did one really good one, and I hope that resonates. Thank you, people. I'll tell you the way I'll do this is I'll tell you who I am and why I'm here. I'll then tell you my story, which is both really good and really sucked. And then, the topics as I have them in front of me, what investors really want to hear, what they don't, crafting a story that sells, building trust, and I'll show you a real world example of what worked, and I'll tell you what didn't. Cool. And look, again, just put things in the chat. I love to make it backwards and forwards. Okay, so I always start this way, and then someone calls me out. So first points for anybody who can beat me on this. I have a magical superpower that I'm going to say none of you do. You don't have your videos on, so I can't tell, but I'm just going to throw it out there. I am 58. So that means that magical superpower is I have only been in sales, and I started it when I was 19. So I have been selling for 39 years. It doesn't mean I'm anything special. It just means if you've done anything for 39 years, you must know a little bit about it. So I love sales. It's what I do. I have been in Asia for 35 of those years, Hong Kong, Singapore. I have been in finance, then fintech, 25 years. I was in corporate. I ran equity trading and stock exchanges, got up to the heady heights of C-level. Well, look at me, what a legend. And I then took the crazy step of doing my own startup. In 2016, I started a B2B wealth tech. I designed and built saving and investment apps. Long story short, from 2016 all the way through to the end of 2023, we raised $22 million. I did close to 20 million in revenue across those years. A biggest year of 4 million in rev. We had some of the world's 250,000 end users, some of the world's biggest banks using us, HSBC, Standard Chartered, everything. And I said to someone the other day, and then it blew up. And they were like, oh, well done. I mean, no, the other blew up, the bad one, not the blew up in a good way. The blew up we liquidated on December the 31st, 2023. It shut. People ask me, why did it shut? Well, because we ran out of money. That's the only reason. Why? And the reason I'm telling you all this is not to be like, oh, pity me, whatever. I just wanted to give you my story. And then I'll tell you how I raised money, what we did, what we didn't do. And you can ask me lots of questions. I'll leave time. If you guys are B2B, the mistake we made was we customized too much for every client at the wrong price. We made promises about customizations that we didn't understand how complex they would be. We end up building these very complex systems that sometimes worked. And we had 250,000 end users. And for any of you that are in asset management, we had 3 billion of AUM. We had clients around the world, but we ended up with a team of over 100. So we were good at raising money. We were great at selling. We were bad at delivery. And the mistake we made was in the easy years to raise money, 2016 to 2022. So you're not all going to love the way I speak and what I say, but again, my other superpower at 58 is I can't help myself. Bill, am I all right to use any language I like, or are we cool with this?
I think you're all good, Ned.
All right. I thought I was a fucking genius for a long time, man. From 2016 to 2022, when my business plan was raise more money. And every time I went out to raise money, we raised money. And you convince yourself you're a genius. We were actually building an unstable business in the long term. Now I look back on it with my sleepless nights. So if you're here for business advice, you're in the wrong room. That's probably the other room about how to run a business. If you're here to learn how to raise money, I got you. I'll show you how to do it. All right, that's me. Let's get into it. Okay, hold on. Let me just mute my thing because it keeps pinging. All right, let's focus. Do not disturb for 1 hour. All right, let's go. Okay, so so I'm going to start. I don't know if you're all seed. I assume you're all seed stage. You're all early on. Here's the biggest. Yep. Okay, cool. We raised 22 million. Our biggest check was 7. Our smallest check was $50,000. Our first round. Why don't I just quickly tell you, we raised 400. Thank you, Sean, for your thumbs up. I appreciate it. I spent too long not being honest. It doesn't help, man. I just say it as it is for whatever it's worth. When I say not being honest, I didn't mean dishonest. I mean just trying to figure out what people wanted to hear. Just say how you feel. It's all good. We raised 400,000 in 2026 on a safe note, US dollars. In 2017, we raised 2016, correct?
Yeah.
In 2017, we raised 1.3 million again on a safe note. 2018, we raised 3 million. Sorry.
Who was coming in and pricing those safe notes, or did you just let them expire and they went at the that floor valuation? What was the?
Yeah, Bill. Good question, man. We in Asia, the safe note, the Y Combinator safe note, wasn't really Asianified, so there's different rules. So we were actually one of, maybe not the first. So we did an Asian version of the safe note. Our first valuation was 4 million cap, a cap of 4 million.
Yeah.
We made a mistake by putting an expiry in. We had a 12-month expiry because we thought we would raise. Yeah, super.
So nobody came in and led the round and repriced it.
We did a secondary safe B, and we raised it from 4 million to 5 million in 2017. Because for those of you familiar with the safe, and I know Bill is intimately, if you put a timestamp on them, you have to have a next event within that time. So we kind of hurriedly did another safe. We did it at 5 million for the second one, and we raised just over 1 million within that safe.
To give context, because we have founders coming from multiple different areas here, a safe note is in certain jurisdictions, it allows you to raise at, let's say, a flexible valuation. So you have that you will bring investors in at, let's say, 1 million. You then have an expiry date, maybe 6 to 12 months down the line, and you have a lead investor that comes in and prices the round, and those early shares will convert at that later valuation minus potentially a discount. This is an ASA in the UK. So if you're in the UK, you'll have, it's called an advanced subscription agreement. So there's just different names for it.
And just to say exactly, SAFE stands for Simple Agreement for Future Equity. It is a very simple piece of paper that angels and initial people can sign easily. If you do it, and I don't want to give Bill extra work, run it past someone who fully understands. It's not that there's trapdoors, but you just need to understand what's in there. We then did a 3 million price round in 2018 at about a 17 million valuation. Then we raised 12 million in 2019 at a 40 million valuation. And then it got a little higher, and then we ran out of money and we got diluted all the way down to the great big fat zero. But we'll keep that for another day.
Okay. One other thing before you jump in, the majority, unless I know differently, all these people are going to be essentially at a pre-seed, almost friends and family type round. Okay. So they're going to be using these tools like an ASA, a SAFE, perhaps instant investments to get these first checks in. I might be wrong with a few people, but I do know that most of the people are going to be in this very early stage, raising to get their MVP built and getting to market.
Okay, cool. Makes sense. Okay, let's dive in, because we have, I'm looking at the time. I want to make sure we do this. I want to show you the deck, which is a bit of a later stage deck, but it makes the point. Agenda, what investors really want to hear and what they don't. As Bill says, you're going to raise initially from the 3 Fs: friends, families, and fools. Your friends believe, your family love you, and fools are people with money who don't know that venture investing sucks and they'll probably lose their money. I can happily say that because before I did my own startup, I did 10 startups. I did it 10 years ago and have still yet to receive any money from any of them. I thought it would be really fun to put money in. It was the best fun to put money in. I felt like a dragon's den. It's brutal getting your money out, not because they're bad dudes. It's just startup stuff is hard. Svetlana, still pre-seed, pre-t-shirt. I hear you. We actually did a hoodie. We did actually. I'll see if I can go. Oh no, I won't. We were so cocky when we raised 10 million. We did t-shirts saying we'd raised 10 million. Oh my god, I hate myself. We did. Yeah, I don't know if you remember.
Don't do that, guys.
I don't know if you remember. Do you remember when Elon was still cool? And let's not get into it. And when he put out, he was on Joe Rogan's Smoking Hash, and then he tweeted funding secured from SoftBank when it wasn't. Yeah. So we put a t-shirt together. It had a picture of Elon smoking hash saying funding secured when we got our 10 million. What were we thinking? It wasn't my idea, it was my co-founder. Anyway, enough. Here's what friends, families, and fools are different because they are no screen share. Ricky, I will share a screen later, but I like just to talk and riff, and then we'll get into a deck. Here's one thing that the investors don't want to see: a deck. Decks suck. But let's. As you see, I get off track. If I can give you one really important piece of advice, what investors don't want to see, and what they want to see, and we can disagree on this. I'm just giving you my view. They probably don't want to see your product. Now, of course, you're thinking, "What? I love my product." Of course, they want to see your product. I'm a sales guy. It's never about your product, and it's never about you. It's how do you benefit the other person on the other side of the table? So here we're talking about investors. How are you going to make them rich? How are you going to increase revenue? Why is your story different from the hundreds of other stories? Because this is a joke from Ricky Gervais, who I do like. This idea, maybe it wasn't Ricky, it was someone else. I have kids, and when my baby was born, I thought it was the most beautiful baby in the world, right? When other people come up and they show you their baby and they look, isn't it beautiful? And you're like, You say yes, but it looks like every other kid on earth, right? It's the same with your product. You think your product is beautiful. Everyone else is just another deck and another product. Don't take that in a bad way. Your main, and I'd like to get Bill's feedback on this. I think at the beginning where you are, it is the story that you tell, the way that you tell it. And look, absolute belief. I want to see absolute belief. And remember, you're mainly delusional. Most startups don't succeed. Obviously, you don't tell the investor, hey, we're not going to succeed. As investors have often said to me, hey, I've never yet met a startup who arrived and says, I have a crappy product that's likely to fail. Will you invest? Everyone says, I have a killer product. Please invest. Yet, why do most startups still fail? Because that's the gap between delusion and everything else. So in your first deck, don't sweat too hard about your product. To me, your financial projections are just guesswork, so keep them high level. But what I would love to see is why you. I'd love to see what you've done to do it. I'd love to see why you believe this. And I'd love to see the reality. Why are people going to use this stuff? Like, what is it? And almost to a degree, from the Goggins approach, if you know David Goggins is, I would invest in somebody who has burnt their boats. If you know what I mean by burnt your boats, I would struggle to invest in, at some point, I know you've probably got jobs and you're in the process, but at some point, they'll either burn your boats, i.e. you're all in, or be willing to, and tell that story beautifully. Bill, I'll stop there for that initial point. Any thoughts?
I think one of the things that's like important to keep in mind is like people kind of use the term investors like it's an all-encompassing word that cover what do investors want to see. Ultimately, a pitch deck or pitching is subjective. Some people will say they like this. Some people will say, so Ned said he thinks that financial projections are pie in the sky. I completely agree. I think that they're mostly made. It's the one thing that I can guarantee is not going to be right within your go-to-market strategy and what your business is going to do. However, some investors really do care about that and want to see it. The things that I think are some of the most important, Ned didn't touch on, is the market size. So there needs to be, a large market, and they need to be feeling the pain of the problem. So those are two key things. But also, building on Ned's point, why you is probably the most important. I've been in the trenches with lots of different founders, and ultimately what separates them is ultimately separates the business is the founders themselves.
And a good point, market size, we don't want to be selling to nothing against America, my kids live there, but you don't want to be selling to the single farmer in Kentucky who has one single problem, right? That's going to be a challenge, right? But you want to show. The other thing is, do not say on market size, hey, the whole world. Like I've seen decks with everybody in Asia. Like, no, like you have to be clear about your market. Complete belief. This is our market. But also the other point is exactly as Bill says, is the problem statement. This is the problem, whether you felt it or they. And one thing that I would say, try if you can, remember, a lot of investors see a lot of decks, and investors are all different, family offices, VCs, your friends, your family. But if we just look at the idea of somebody who is in general looking to invest, they've seen hundreds of decks. While you can follow someone else's deck, and I'm going to show you one of my better ones, send a video, do a Loom. By the way, do a Loom if you're not familiar with Loom. Your ability to tell that story in ways that stand out, super critical. Okay.
One thing to build on that real quick, kind of going back to Ned's point about how he was great at fundraising. Now, in my opinion, I mean, obviously there's all these things that are really important that you need to show in the market size, but everything is basically, telling this story. And I think one of the number one signals for most investors is, can this person continue to raise? So Ned had the ability to sell, and he was able to continue to get backing because they knew that he could continue to raise. And this is really important. So like investors in general, and I know I keep speaking generally whenever I said that they're all different, but they are mostly followers. So the tricky thing is getting this initial belief, these first people, because once you have, people that are in, then you can kind of use that as FOMO against the other investors, because you're going to be able to say, oh yeah, we're almost fully subscribed in our 250K round. We'll see what we can do to try and fit you in. So you can kind of create this FOMO. So they are all followers, but it's about how do you get these initial checks in, telling that story. And one of that is, can this person continue to raise? So there's many different red flags I think that we should discuss through this process of, why that might be a turnoff. And the investor would think, this person isn't very skilled in raising capital.
Great point. I mean, and you get one, you will get many. The first one, Bill's right. You get one. People are scared of risk, and if you say, "Hey, we've already got an investor," wow, what am I missing out on? If you don't have, look, you can't lie. If you don't have an investor, you don't have. You've got to go at it. One thing I would say, I don't know if any of you follow me on LinkedIn, please do. I talk about sales. I run a sales advisory business now. I often get paid to say this, which sounds ridiculous. If you want to sell more, sell more. I don't want to hear any of you making 10 VC calls and giving up. It is 100. It is 200. It is a lot. People can't buy something they don't know about. Let's say you're in InsurTech, build a list of InsurTech investors. And if there's 1,000, maybe some of them will have the wrong check size. So I'm not saying just spray and pray, but there are hundreds of investors who could be interested in your product. The way to get that one is to increase your chance of it. They have to know about you. Build it and they will come doesn't work. And the important thing is, as Bill says, is if I met a startup founder who did one pitch and got lucky, maybe. But if I met a startup founder who had got an investor and I said, how many people have you pitched? He said, well, I looked at the investors and I found out there was like 500 in my field. And I at least sent an email to all of them. Dude, I'm backing this guy or this lady, because fundraising is a combination of the right story with passion. Interestingly, and I agree with Bill, what you'll find is numbers are not important, so they're really important. Once you get to Series A or seed and you said you will hit numbers, people want to know. So numbers go from not being important to completely critical really quickly. But I also think showing investors that you have a tenacity, I'm going to do all it takes. And that means, hey, look, if any of you tell me you can't send 500 emails, I don't accept that. You can. The ability to date. Now, is cold blasting investors going to work? No, not really. You have to build network. You have to be smart. You have to ask. There's many ways to do this, but just increasing your chances. Okay. Creating, your vision, traction, and team, crafting a story. We talked a lot about story. You are the main story, but your traction and team, don't be shy, even if you got $1 from somebody. Show anything. Traction, even you got an award or you've got 5 beta users, or I like this idea, and I think it's important, is trend is your friend. This is what I learned with my investors. Of course, the ultimate number is important. You want to be a unicorn one day, right? And, sell for billions of dollars. Yay. I will back a startup that does $1 1 week, then 2, then 4, then 8. Obviously, we all would. Rather than if I met a startup that had 100 today and did 100 yesterday and 100 the day before. It's not too much to think about that it is the trend. So traction, super important. Team, one thing I would say on team, if you've got a co-founder, I don't think it makes some investors like co-founders, some like single. Just say it as it is. Your team is your team. Your team is your team. Talk highly of them. Super important. One other thing I'd like to say on this, as part of your story, do not talk badly of your competitors. You are solving a problem. Talk about the problem. Present the problem. You're the solution. And you say, look, and we also cheer on the other people are doing it. Super important. Bill wanted me to talk about...
Interesting take on that. I want to push back just slightly. What if your wedge is that your competitor is dropping the ball? So let's say you initially have your pitch and they would say, oh, well, they're doing that. So you'd say, oh, well, we've spoken to the customers of that, and this is where they're dropping the ball, and this is how we're solving that. Do you not lead with that, or do you wait until that's a question?
Good point. When I say never pour shade or put shit on your competitors, I mean gratuitously. What I mean is, hey, we're in XYZ industry, and there are. Oh, sorry, Matt, if you go on mute there, Michael.
I got
Thank you.
muted.
Thank you so much. You say the reason, what I like to lead with, and I do this in a lot of my sales. Hey, ABC company, look, they've been a great. So if they're a legacy company, what I say is, ABC company, have a lot of respect. They help to create this industry. They put a huge amount of work. But like any firms, legacy means they have got slow, and that's why we think we have the opportunity. Or if it's another startup, I can just say, hey, it is great that this industry is attracting startups and the other company is doing great work. But we believe, and if they've dropped the ball, like Bill, and again, as we know, there's no right and wrong here. I'm always super cautious if you say, hey, they dropped the ball, they did a bad job. Unless it was public, I'm a little hesitant. I like the more general. You see, you've, in a funny kind of way, they have had to drop the ball in some way for there to be a wedge to get in. So if, look, I'm not taking on Apple for iPhones. I don't think there's much, maybe some other firms did, and maybe they get in. But if we're looking at an industry and saying, hey, the reason we're here is there is an opportunity. Why? It might not be that the other firms are bad. We have found a new way to do it. They have done it this way. We think we have a new way to do it that is going to put us above them. And the phrase I like to use is, why would you hack a path through the jungle when someone else already cut it for you? We think this company, we may not be first, but they've cut the path in the jungle. We can move with speed through here, learn, and I think the tools we've got are better. So I like, I was asked on LinkedIn the other day, what characteristics of a founder would you invest in? Humbleness, humility, hard work, honesty.
4 H's.
Yeah, man. I mean, you get a humble, honest, humorous, hardworking. I think it's good, man. That's what I'm looking for. So, okay. I want to get into valuation. After this, I'm going to show you my deck, and you're going to get, I mean, look, who doesn't like that person? Humble, honest, humorous, and hardworking. That's, you've got to show, hey, I heard a phrase. So I didn't get out of my start with any money. One day I will have a lot, because you have to believe, right? Actually, I don't really care how much money I have anymore. It's a different world. Anyway, I have this idea. If I'm an investor, if I don't absolutely love the founder when I first meet them, I'm going to hate them by the time I put my money in. And who do I love? I love good humans. Who are good humans? Humble, honest, humorous, hardworking. Let's go. I think that's a good thing. So I know I don't want to get into being life advice, but it is important. You're telling your story. Sorry, Bill, go for it.
Before you get into valuation, I kind of want to frame it for you a little bit. So a lot of our founders, before going into their fundraising, they want to have a clear idea of, where exactly they're going to spend their money. And investors also often want to see that. So they'll want to have, very clear, we need 250K and this is how we're going to spend it. Now, sure. Before you actually go out to raise, I think it should be more based on how can I increase my valuation? Should be the ultimate, what if a founder wakes up every single morning, how can I raise my valuation in order to raise enough or in order to raise that enough to give up 10 to 20% of that. So if you raise 250K, that's what you can use, but you can also find ways to spend 500K and maybe get a faster market share or a better market share early on. So I would say how do you approach coming up with your valuation versus how much you ultimately try to raise? A lot of times what I'll try and say to founders is, we don't necessarily know how much we're going to raise just yet, but we're ultimately going to be raising 10 to 20% of our valuation when the time comes.
Makes total sense. I think it might be worth now to jump in to my deck, show a little bit about that so people can have a look. And I'm going to show you because this has it has amounts, and I can talk about valuation. Let's do the screen. Oh, damn, I'm sorry. Sorry, guys. Got it. Got it. Go away. Bill, because I'm on my screen now, I can't see the chat. If anybody asks questions, if you can shout out.
Yeah, I got you.
All right. So I'm going to show you this whole deck. This is part of our journey that we did, and this is when we were trying to raise 10 million. I think in the early days, valuation, because there's no hard and fast metrics, i.e., you can't do a discounted cash flow forecast. It's very hard to be scientific. I'll actually see if I can find a company I'm advising just went to Perplexity, DeepSeek, and Google, wrote how much money, how long they'd worked at it, how much effort they'd spent, what revenue clients they had, put it in. And I always told them it would be about 5 million, and it was 4 to 6 million. I don't think it's overly rocket science, to be honest. What I would say is this: in your safe round or your early days, you're going to have to value it at an amount, exactly as Bill says, is how much money do you need to run the business? So let's say, and how much do you want going forward? Because one thing, by the way, to say, guys, once you start raising, you're always raising. It's very unlikely this is your first and only raise. So I would, and it's very hard to know how much. When I raised 400, I didn't know that I'd need 10 million, right? I must admit, I thought, 400 was a lot. So you cannot obviously value your business at 500 and raise 400 because you will be out. So to me, I'll get rid of this. To me, sorry guys. To me, what we would need to do, what we would be raising in our early stages, is understand how much money you need. There's no real scientific formula. On average, we see these pre-seed rounds in 3 to 5 million. In essence, there's no logic for it because you just started it. You had an idea, you have a PowerPoint, you built a prototype. What is the real justification apart from other people's willingness to do it? But be cognizant of the fact that once you start on this journey, there's going to be a few factors. Your valuation hopefully will go up, not down. Your shareholding will go down, not up. And the amount of money you need, your money in your bank account will most likely go down, and the amount you need will likely go up. So I know there's quite a few levers, but just think about that. Your shareholding will go down, your valuation will go up, the amount of money you need will go up, your bank account will go down. Try to balance those out. So when we raised 400, we had 6 people. I wasn't taking a salary. My co-founder wasn't taking a salary. The other 4 people, we had a few seats in an office, didn't have much, felt like it would last forever. Of course, very quickly, we hired another 6 people, and it ran short pretty quickly. Bill, any thoughts about that before I mention Series A and B valuation? Because I know they're not there yet, but I think it's important to contextualize it.
Sorry, I was actually kind of fielding some questions in the chat. I didn't catch the last bit. It was about valuations at early stages.
Hold on.
Benoit wants to chat.
This wants to chat. He does. It's all right. It's all good.
Yeah, for early stage like valuation, there's a few. It's a very tricky thing. Okay, I will say kind of going back to the point earlier about different types of raising. So like the ASA and safes allow you to kind of set an initial valuation. But ultimately, a valuation is going to be, if it is a price round, it's going to be determined by a lead investor who's going to come in at a certain point. You can also do what's called an instant investment here in the UK. I don't know if where in other jurisdictions if they have this, but it allows you to personally set the valuation, and people will come in underneath that valuation and allows you to kind of raise as and when. Whereas in a normal price round, all the money has to drop. All the money needs to be committed before the money can be released. Whereas an instant investment, money can come in as and when, and that allows you to have your valuation. Last thing I'll say, I know I'm kind of all over the place, valuation is ultimately what someone will pay for your business. So it's a haggle process. at least with that lead investor, and then everyone else kind of has to kind of fall in line. But ultimately, you know, if someone's not willing to pay $4 million for your valuation, you say, thank you, that's what we believe we're worth, and we'll find someone that is.
And one thing to add to this, when you're raising money, the days are long, the months are short. I'll say it again, the days are long, the months are short. What do I mean? What I mean is, I had 9 months runway and I thought that's a long way. And I woke up the next day and we were done. You know, the signing bits of paper takes longer. So if you have, you know, if you have 6 months runway, you need to be focused on that, on raising money right away. To me personally, I would give up valuation for things like speed of closing, for terms such as, preferred, what's it called? Bill, what's that horrible thing called? Preferred
liquidation.
Preferred liquidation, you know? So, and just think about, everyone focuses on valuation. It's incredibly important, but I would think about terms. Are you giving them a board seat? Yes, no. Do you have preferred liquidation, which means they get more than their fair share of the money back because they're an investor and you're just the founder? Doesn't mean they're bad people. They're just protecting their interests. Really, and speed of money. You know, 100K to keep you alive is worth more than 200 if you might die, right? From that point of view. I would say this, don't sweat too hard over you. By the time I got to 10 million, I had like 18% equity left. Honestly, people sweat too hard at the beginning. I watched Dragon's Den and they're like, oh, I'm not going to give up the extra 3%, dude. In my humble opinion, you know, remember, I got burned at the end, so I have a few more scars, so I can be a little bit more, 3% if you become a unicorn is a lot of money. I understand it, but if it's the difference between life and death. Okay.
Yeah, I literally am. If I watch that show, I'm yelling at those people for that same thing. It's like, it's 3%. Just give it up. Don't be greedy. Don't be greedy. Also, there's many different, like, we can get into this in another session, but like being greedy with your equity is not the way to run. Like it's very much what I see in UK founders as being ultra greedy with their equity. You know, if you can use your equity to get users through ambassador programs, through strategic co-founders, use it. You have 100% of your business right now, but that's worth nothing. It could be worth a lot. So use it in the right way.
Absolutely. Absolutely. Good points. Okay. So be inventive. Don't worry too hard on valuation. Get the right terms. Message everybody. These are just high level things, but they're really important. And look, I'm going to show you what I think is our best deck. You might not love it, and I'm actually going to pitch it to you. We were trying to pitch for $10 million here at a 32 million pre, 42 million post. We had already, been alive for 3 or 4 years. It was 2019. We had previously raised about 5 million. So I'm just going to give you my best effort as if you are an investor panel at a large VC who has a 10 million ticket. I'll do a 5-minute pitch. Hopefully it'll cover some of the points and then we'll stop. All right, let's go. Okay, guys, and I'm going to time my 5 minutes because when I say 5, I'll be 5. One thing just to say before I start. I personally don't think you're going to convince an investor who's not already interested in your space to both be interested in your space and then invest in you. If you're in short tech, it's not your job to go and convince an investor who's never been in short tech to get into short tech. Unless they're your friends or your family, then they're just investing in you and they don't care whatever you're making. But if it's actual investors, find people who already believe that your space is relevant. So I was in wealth tech. So I'm pitching, so I don't need to explain wealth tech. I just need to show why it's relevant for me. All right, let's go. The problem that we're facing today, remember it's 2019. The problem we're facing today is that banks are stuck in understanding how to offer wealth digitally. Users want to use mobile, banks are legacy, and the traditional engagement method means that they're losing customers to these new digital wealth management tools. The market today is huge. Today, it's 84 trillion in wealth and it's going to 145. But only 1% of it is currently digital, 0.9, so just a trillion, but 11%. So the market increases to 16 trillion of wealth will be digital by 2025. So what we did was we built a platform that can connect users via their mobile into your banking operation. Remember, we're a B2B company, so we're designing and building these saving and investment apps for banks. We are the connective tissue that every bank can use. But why would you think about investing in us? Well, we've already done it. In the first 3 years, we managed to secure all these clients. And while you might not recognize all these names, some of them you will, from HSBC to Standard Chartered, to Principal, Malaysia's biggest banks, etc. And indeed, XP is Brazil's largest brokerage. So we've been able to not just do it in our own region, we've gone global. And in the next 6 months, all of these clients are launching either for the first time or again with us. Some of these are the biggest in their region. And actually, talking about Dragon's Den, if you've watched Shark Tank, Kevin O'Leary himself is using our tech to launch his investment app. So people in the digital space understand that Bamboo is the place to go, and HSBC understands it as well. What we've done is traction. I believe that as an investor, you're looking for a team who can deliver. We've taken our revenue from 280 in the first year to 300,000 to almost 2 million. And our clients signed, our large enterprise clients, and we are starting to see them scale. We have signed 9 in the last year. And the reason that I'm here today is we can build this business ourselves, but the level of demand that we're seeing is outweighing our capability to deliver. We have over 260 incoming requests this year. We have 48 in discussion, and we need capital to be able to keep up with the pace of demand. And here's the reality, like you can't deliver unless your team stays. We have one of the most loyal teams of any fintech. After 3 years, only 2 have left, and we're now a team of 38 of some of. Now, I'm biased. I think they're the best team you will find in wealth tech, but they've stayed with us. They haven't left. This is a team that knows what to do and can deliver. And this is us. I'm the storyteller, the sales, and Aki is the brains. He thinks, I sell. Together, we have the right shot to dominate this space. And I think this is really important. We believe and we know we can do this without funding. We will be up to 15 million by 2022 without funding, but with funding. And that's why we're here. We believe that we have the opportunity to be the absolute leaders in this space. And you want to know our vision? Well, this is our vision. We want to be the front cover of the New York Times when we reach 10 million end users. We believe we can do it. That's our team. And we believe that one day we will be the headline news. So where are we now and how much money do we need? As you can see, we've raised 4.3 million so far, increasing valuation amount every year. We have one of the top investors in the world, Franklin Templeton, who led our Series A, and we're now raising 10 million, and Franklin Templeton will participate in that round. And the money we're spending is for growth in America, growth on different product lines, and other versions of our product. We've built the base, we can now grow. So to summarize, we have a global brand, we have global clients, we built some of the best tech. The artificial we have enables us to scale, and I think we are the right bet for you. Thank you, that's us. I will stop sharing.
I'd invest if I knew that this company was, I didn't know this company was no longer around, Ned.
Now, what went wrong? So, okay, well, first of all, we were phenomenal at selling, and I don't want to big myself up, but hey, look, I've been doing this for close to 40 years. If you do anything for 40 years, you get good at it. So it's not that I'm a magician. I've only done one thing in my career, sold stuff. But what I wanted to show you is, did you notice I never talked about the product almost? They know your product. Your product's not relevant. It's where you're going and how you're getting there and what you've done. That's what's critical. That's what's critical, right? It's how you tell that story. Because remember, if they say, I'm interested, they'll come and kick the tires of your product. They'll come and kick the tires. Who are you? Why you? And you can hear it in my voice, man. Like excuse my French, I fucking love that company, man. We were good. What did we do wrong? Where was our blind spot? What went wrong? And it's not even in their deck. Our delivery capability, we were not partly able to keep up, but we customized too often At one point, I was delivering for 20 huge institutions. My delivery team didn't work. And I'm not blaming them. I'm the captain of the ship. It failed. It's on me. I didn't build the right delivery mechanism. We flew a bit close to the sun, burnt our wings. Down we went. So, and I'll stop after 1 minute and 11 minutes for questions. I hope that's okay. What I wanted to show with that deck, it's those points I made are the same for everyone. I'll share this deck with you, Bill. I'll send this deck to you. Everyone can have it.
Perfect. Yeah, that'd be great.
And I hope, and Bill, I'd love to hear your feedback on it. I'll be honest, guys, it took me 4 years to get to that deck. We had decks with our product in and all our financial forecasts. Remember, in the first meeting, you're just trying to get them on board. You can get into the details afterwards. What I want to show you is make the story beautiful. Then you have the chance to tell them the details. Bill, I'll stop there. I'm happy to answer questions from anybody. I hope that gave a good overview.
Yeah, before doing that, two slides really stuck out to me was that team retention slide. I don't think I've ever seen that before. That's absolutely brilliant. And the effect of the raise on your growth rates, I thought that was also really good.
Thank you.
A little bit more difficult to do. It's difficult to do when you're still so early to do either of those.
I know.
Yeah, those are great.
Thank you. Look, Bill, I really, Bill, it took us it took me a long time because I would sit with investors. And, follow me on LinkedIn. I think sales is theater. One day I want to be a stand-up comedian. And when you're a stand-up comedian, you've got to look at your audience to see when they're laughing and when they're not, because the joke that lands is not the joke. And whenever I showed a product slide, I could see in the face of the investors they weren't interested. And when I asked them questions, they would say, "What's your team like?" Or "Why do you need funding?" I'm like, okay, let's get to those questions. And I think you're right. For very early stage, you're right. You can't quite be as good as that, but you still think about it in the same way. Hey, it's just me, but I'm not leaving this. Or, hey, I might only get to $100 by myself, but I get to 500 with you. You know, it's the same idea. And Bill, I think you summarized it really good. Where are you going? How are you getting there? I think that's worthwhile. And Gemma, thank you. You know, I would encourage you all to have your own newspaper slide, just a quirky little vision slide. You ringing the bell, and you know, let's say you are curing malaria and every kid's happy, or I don't really know what you're doing, but everybody has a dream where they want to be, not sitting in your Lambo in Dubai with a bottle of champagne. No one wants to see that. All right, that's gross. But something that is that you want, that's tangible, right? Like that is tangible. Yaz, you asked, what about for baby founders who've just started and have a product? Yaz, your product's irrelevant. I don't give a shit about your product. I'm not being rude, Yaz. I don't give a shit about any of your products. I want to know why and what you're building and where you want to go. I think, Bill, I'm going to steal your line. Where are you going? How are you getting there? Yaz, look, I don't. Bill, is like 20-something people on this call. Stats say only 2 of you are going to make it, but you all believe. You all believe. Show them your belief, because at this stage you're all early. I don't really care. See, and this is the thing. I know I keep banging on about it. It's not your product. It's how you're changing the world. It's why you. It's where you're going to get to. It's why this is going to be worth a lot of money. Your products, you tell them what it is. You know, did you see in my first slides? Banks are going to lose their customers because of digital. We built the glue to keep their customers. That's it. No product slides, no nothing mentioned. And remember, I'm only pitching to people in wealth tech. So I'm not pitching to, you know, Mrs. Miggins in the street, or, you know, Mr. Joe who doesn't know. Like, we're not trying to convince the world. We're trying to convince our exact audience. And you have to believe they know what you're doing, because otherwise you're not convincing them, guys. Just unless they're your friends or family, then you can convince anybody of anything. But that's an entirely different thing, right? So I hope that helps, Yaz. Kate, thank you. Thanks for sharing. Wayne, just finished hyper. I have very little traction. Is it better to wait for some sort of traction before approaching investors? Absolutely no, Wayne. No. Traction is a traction can be hard. Let's say you've got $1,000. So you had none. Now you got 1,000. You know what they're going to say? When are you going to get to 2,000? It's almost easier when you got none, because you're like, yeah, I've got none, but I believe I'm going to get 1,000,000. If you got 1,000 in the first month, I think you're going to get 1,000 in the second month. I can pin you to what it is. Now, when you have revenue, you might get better valuations and more. This idea of waiting for traction, you're just scaring yourself. You're talking yourself out of it. Put yourself forward. What's the worst going to happen? The VC is going to say no. Look, I have a thicker skin. Sorry.
There's many different ways of defining traction. In B2B, it's whenever you're pre-product, it's getting those letters of intent. But there's also, speaking earlier about being able to sell, like let's say you're pre-product. And I did a webinar previously with Anthony Rose of Seed Legals, and he talked about advisors. He doesn't think that they're important on a pitch deck. I push back because I think they actually are really critical to have a solid team of advisors, because that in itself shows traction, and it also shows that you can sell your vision to people whenever you're pre-product. So people are willing to put their name behind you on their pitch deck. Ultimately, it reflects on them, so they have to be able to back you. So you can also show traction in other ways. It looks like you're B2C, so that can be partnerships with other organizations. But traction is extremely hard to show in B2C, so you have to think outside the box. But ultimately, get out there and speak to people. There's many different types of investors. It doesn't necessarily have to be venture capital. It can be, angels. And then it also is at this early of a stage, I think Ned touched on it earlier. It's, working in many different, fundraising is working in many different work streams. So getting out, going to networking events goes a long way as well. It's not just cold outreach. That's probably the hardest slog that you're going to go through.
Yeah, absolutely. Look, cold outreach is there, but be smart. Be on LinkedIn. Talk about it. Some people build stealth. Good luck to them. It's not my bag of tea. Everybody's to their own. But B2C, Wayne, the one thing I would say is, if you've got any traction, remember, if you've got one person in month 1, you just need 2 in month 2. You just need 4 in month 3. The action number, to me, isn't important as the trend. So you'll be like, oh, I've only got 1 user. Hey, did you get 2 the next day? Now we're talking. You can sell that. Darren, loads of nuggets. Thank you. Yeah, investors. And again, people always, like, oh, Ned, I love my product. Hey, I love my kids, but you guys don't love my kids, right? Like, everyone loves their own thing, right? Everyone loves their own thing too much. We're like, hey, isn't my product beautiful? No, I don't give a shit. I'm an investor. I want a return. Talk to me about why you. Sean, I have an investment of 100K for an MVP. Now I want to launch. They will get some sort of share, but I'm sure where to value it. Sean, okay. Bill, you'll need to restrain me here and give them some sense. Just pick a number, Sean. Go for it. $3 or $4 million from most seed. See if they vomit on you. So the idea is, Bill, Sean said, I have an investment of 100K for an MVP. I want to launch. They get some sort of share. But I'm sure where to value it. My gut would be a few million. Don't waste time thinking too hard and crack on. But that's not professional advice.
Yeah. So they've promised 100K without evaluation, Sean?
Yeah, sorry about that, guys. Yeah, so we built an AI product for them, and it was 100,000 because we were able to show them that we would save them about 500,000 a year. So for them, they actually bought us a product. But towards the end of the negotiations, they said, we could commercialize this and white label it out. I went, absolutely. So we actually don't. I want to do the right thing and bring them on as a partner, but we have a product, and now we want to commercialize and scale it. But I'm just not sure what level partner to bring them in at.
They paid 100K for the product. They didn't pay 100K to invest in that situation. Right?
No, they didn't. That's right. So they'll have to buy in. But they have a network, and that's really what I want to leverage. So they'll be a strategic partner because they're part of one of 250 other partners that they can introduce us to.
Okay, well that's exciting.
So stick a number. Again, there's not too much science. Stick a number on it. Get what if Sean, if they've already paid you 100K, really good job, man. Well done. You have a good product. Awesome. You stick a number of a good few million on it, and see what they do. People will tell you their reactions. Investors are big boys and girls. Stick a number that you'd be happy with. one bit of advice: if you've got a product that's already got a bit of traction, ask for a number you're embarrassed to say. Because if they say yes, you won't think, oh, fuck, that was too low.
Yeah.
So ask for a number it's embarrassed to actually say. I used to use this when I wanted, like when I was searching for a new job and I didn't really want to move and I wanted to stay in my old job. And they were like, what's your salary? And I would just say some ridiculous number. And they would almost always say no. But the one time they said yes, I'm like, oh, Jesus, let's go. So don't be greedy per se.
Sean, is this the start of a round, or would this be just like a one-off investment to get you going?
I'm not sure. It's my first rodeo, right? So we went to selling a product, and we actually thought 100,000 would cover the development and good to go, and we did. And we're just finishing it now, and that's exciting. So we're talking about the next step is how do we grow? So they have this partnerships that they can productions, but it can be global. So right now, I want to bring them on board because there's some quick wins. So I think it'd be seed or first round, and then try to get a second round within that 12 months, 18 months as we get more partners on board.
Yeah, if you really want them, I would say like use that number that Ned said that is scary, and say we're going to be raising that in, let's say, 6 months. So you say, let's just use like for the sake of numbers here. I'm going to use lower numbers, but I'm not a mathematician. Just keep things easy. So, oh yeah, we're going to go out and raise. This is just kind of an instant investment. This gets us going off the ground. We're going to go out and raise, a full priced round in 6 months at 2 million. And this is where you get creative. One, you can use a founder friendly instrument like an ASA or a SAFE that allows you to have a flexible valuation. Or you give the investor-friendly instrument here, and that's the instant investment. If you're going the instant investment, the sales pitch is, look, come in right now at $1 million valuation, get us off the ground. That's going to get you, if you give another, let's say they give another 100,000, 10%. In 6 months, we're going to be up and running. We anticipate having a valuation of 2 million. So on paper, your money in 6 months is already going to be doubled.
Yeah. All right. I like that. Cool. We should have more. I'll go back off here.
No worries. And just quickly, I answered Shenny. One thing I've learned: just do your thing. You said you should vibe code and MVP, prove your idea, but just try to raise money because it's not either or. Just go out and try to raise money. If you don't raise, it's okay. But I wouldn't. My overall gut feeling is try not to wait. There's no downside. They tell you no. Not my problem, but I must have been told no hundreds of thousands of times. I used to sell insurance door to door. The no's don't hurt you. Your perception of the no hurts you. Don't let it hurt you. And I'll finish on this. They're not saying no to you personally. It's not, hey, Shenny, or hey, Wayne, or hey, Sean, we don't like you as a person. Just the wrong product at the wrong time. So if you can get unemotional about it, it's the way to go. Anyway, we're done. Thank you, guys. Got to go.
Thank you, everyone. Thank you for coming out today. Thank you, Ned, for co-hosting this with me. Hopefully everyone got some good nuggets. If you want to reach out to myself or another member of Hyper to discuss anything fundraising, feel free to do that. Ned also runs his program of All About Sales. So get in touch with him if you're wanting some support with sales. Thank you, everyone. I'll try to create the recording for this and get it posted onto Apollo. Everyone have a great day or evening.
And Bill, I sent you the deck. Share it with everybody. Bye, everybody. Take care.
What a guy. Thank you. Cheers, everyone. Bye.
Bye.
Thanks, Bill. Thanks, Ned.